Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Friday the 8th of January. So markets have come off quite a bit from yesterday. Key price drivers are, number one is the weather forecast again, providing a lot of volatility, this time being revised upwards, so pressuring the sentiment and UK energy prices across the curve really. Number two, we've seen UK gas system today is oversupplied and the power system is reasonably comfortable, although margins are down on where they were the last few days. And finally, number three, oil prices a little bit better, having recovered as Chinese stocks also recover. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So firstly, looking at those weather forecasts, as I say, they've been providing a lot of volatility in the UK energy markets recently, so that's where the focus of our attention is going to be today. We've seen temperatures for the back end of next week, around the 16th of January, revised upwards around 3 degrees from where they were previously. While that still is below seasonal normal levels, it represents about 40 MCM having been eroded from demand forecasts, so makes the outlook for the near term at least much softer. Looking further out on some of the less reliable long-term weather runs, we're seeing actually forecasts across Europe moving above seasonal normal levels by around about the 19th of January and then staying that way really for the balance of January. So that's all weighing on sentiment and has eroded a lot of the rally from yesterday, which saw prices push up quite a bit. So now February gas is around 3.5% lower and summer gas is around 2.8% lower than where it closed yesterday. Looking at the gas system today, we're seeing line pack forecasts around 7 MCM long, so oversupplied today. Demand has actually risen today from where we were yesterday, as temperatures are a bit cooler, having had a first frost of the year overnight. Looking at supply though, that's still reasonably good, despite actually some outages in Norway. So Langled flows are around 12 MCM down today, but those outages aren't expected to last too long. Elsewhere we've seen South Hook LNG send out pick up a little bit to around 30 MCM today, while BBL flows from Holland have also picked up to around 25 MCM today, so hence we've still got a reasonably comfortable picture there. On the power side, margins are below 10 gigawatts today for the first time probably this year. We've seen the wind somewhat disappoint compared to previous days, only around 2 gigawatts of wind generation today, and that isn't expected to pick up much through the day either. But we have seen coal step up to the plate a little bit, generating around 8 gigs today, with CCGT still the dominant force in the stack with nearly 20 gigawatts. The French interconnectors still at 75% capacity as well on the imports, so that's expected to be resolved before too long, but is still in place at the moment. Finally, looking at the oil markets, Brent has recovered a bit from the 12-year lows that we saw yesterday. It did get down to $32 per barrel, but we're back above 34 today. That comes as Chinese stocks have recovered around 1.6% today, as the Chinese authorities have removed the controversial circuit breaker, which saw trading cease within about 30 minutes of the opening yesterday, as stocks dropped over 7%. Today, though, they're looking a bit better, and the Chinese have also avoided any further currency devaluation, which is helping the outlook. One last thing, GBP sterling has recovered a little bit from against the euro today. We did see it break below the key support level at 135 yesterday. It's now trading at around 134.4. That's it for today. Have a great weekend, and we'll speak to you again next week.